Good evening, everyone. Well, it hardly came as a surprise, but President Reagan today announced the resignation of Treasury Secretary James Baker. Baker is leaving in a week and a half to head the George Bush campaign, and the president is nominating investment banker Nicholas Brady to succeed him as the nation's top economic policymaker. At a news conference this afternoon, the president had high praise for Baker's accomplishments during his 3 years in office.
The changes we've brought about in America have required the dedication and hard work of a massive team of people. But Jim Baker has helped lead the charge since he strode into my campaign in his cowboy boots in the summer of 1980. He's taken his licks and earned his stripes, and Jim, if there ever was a Reaganite, you're it.
It does seem to me that in seeking to advance your vice president's candidacy, I can best help ensure the survival of your legacy and assure that your remarkable contributions are extended on toward the 21st century.
And later in the program, we'll take a closer look at the man President Reagan has nominated to fill Baker's shoes, investment banker Nicholas Brady.
The July unemployment numbers are in, and they show that the nation's unemployment rate inched upward to 5.4% last month, 0.1% above June's 14-year low. But as Jeff Reisman reports from New York, there's little in the numbers to suggest that the economy is slowing down from its torrid pace.
Despite the small rise in the jobless rate, other data showed job creation remained strong in July. There was a healthy increase in non-farm payroll jobs, considered a key gauge in future economic growth. There was vigorous employment growth in manufacturing. The number of service industry jobs also rose, with almost half the increase coming in retail stores. All of this latest unemployment information is considered a key indicator.
It's the first blush view of July, and indeed the first blush view of the third quarter. We're starting very strong, going into the quarter strong. And what this July data is telling us that industrial production could be up by as much as 3 or 4/10%, and personal income might be as much as 6 or 7/10%.
The employment report today is probably the strongest report that we've seen on the economy in months.
Over 62% of all Americans had a job in July. But for those without, the jobless rate for adult men and adult women remained about the same as June, as did the unemployment rate for blacks. The jobless rate for Hispanics dropped slightly to 8%. The one trouble spot continued to be teenage unemployment. Economists are generally encouraged by the latest overall unemployment report, discounting the 0.1 percentage point rise to just a minor month-to-month fluctuation. About the only negative being mentioned by economists in this latest unemployment report is concern over inflation.
Anytime you have an economy that's expanding more than its potential rate of growth, as we have right now, those fears have to be there.
The tightness of the labor market is really generating upward pressure on wages.
Further upward pressure on inflation is expected to continue, according to many, until the Fed takes further action to slow this rapidly growing economy. In New York, Jeff Reisman for the Nightly Business Report.
The economy may be growing rapidly, but it was a no-growth day on Wall Street as the Dow slipped almost 7.5 points. With the details, here's New York correspondent Neil Cavuto sitting in for Paul Kangas. Neil?
Well, that is probably an understatement. A typical Friday afternoon in the summer. That's how one big trader wrapped up this less than stellar day on Wall Street. A fitting close to perhaps one of the dullest trading weeks this year. Even by August's usually lackluster pace, this was one slow day. Surprisingly strong June and July payroll data released before the market opened didn't help matters any. The data only fueled talk of a hike in interest rates, and that was enough to send many investors scurrying to the sidelines. And those who stayed, well, they largely decided to sell. In no time at all, declining issues were storming ahead of advancers by about a 2-to-1 margin. Even ex-dividend trading and the likes of Niagara Mohawk, Duke Power, and Dow 30 stalwart General Motors just couldn't give the market a boost. All day long, the story was the same. No momentum for buying, but plenty for selling. And virtually every major stock group felt the pinch. The transports, the utilities, the oils, the drug group, all part of a losing litany of issues unable to buck the downward tide. It was the kind of day wrapping up the kind of week that most bulls wanted to forget. After all, said one, August is still young. Reviewing some of those major averages, the Dow off by the same amount it was off yesterday, 7.47. And for the week as a whole, it's off almost 10 points. The high at 2128.73 and the low some 23 points below that. Today's volume, the second lowest on record this year, and the up volume being dwarfed by down volume. The transports down 4.03, the utilities down 0.24, the Dow 65 off almost 3 points, and the New York Stock Exchange closing tick is surprisingly strong, 243. The S&P 500, 400, and 100 were all off close to the 1-point range, and the Commodity Research Bureau Index for September up 0.75. The New York Stock Exchange Index down 0.46, Value Line down 0.61, and the Wilshire 5000 Broadly Based Index down a little bit more than 7.8 points. Well, it wasn't the overall unemployment number that rattled the bond market today. It was some of the details behind that number. Details like that strong, unexpected 283,000 job spurt in non-farm payrolls and a big upward revision in June payrolls as well. The fear is all this job growth shows an economy doing a bit too well. And when things look too good, bond traders fear too much from the Federal Reserve, namely some rapid credit tightening that some fear could start showing up as early as next week. Reviewing some representative bonds then, these U.S. Treasuries down almost a point to yield 9.13%. The Shearson-Lehman Index down 10.64. And today's Fed funds closing pretty much where it has been all this week at 7 11/16%. I'll be back shortly with a complete look at Wall Street today.
On the precious metals markets, gold and silver both finished lower, while platinum rose on concerns of labor unrest in South Africa. The dollar soared on the New York currency markets, hitting a one-year high against the mark in response to the July unemployment figures. The pound lost 1 3/4 cents to the greenback. And oil prices recovered from several days of steep declines to post strong gains in both New York and London.
Zayre Corporation was hit with bad news on two fronts today. First, the company disclosed that due to disappointing sales in its Zayre Stores division, it expects to post a substantial loss for the second quarter. Then the company revealed that corporate raider Herbert Haft had filed for permission to buy an unspecified amount of the firm's stock in what could signal hostile takeover attempt. Haft and his son Robert have been seeking to acquire a large retail store since they sold their Dart drug chain in 1985. And they have made some $200 million from thwarted takeover attempts. Dean?
Well, apparently the discount trend in retailing has yet to reach new car showrooms, as Chrysler today followed Ford in announcing tentative price hikes for its 1989 models. The increases will average 2.3%, which Chrysler Chairman Lee Iacocca says continues the automaker's policy of pricing restraint. The Dodge Dynasty will show the biggest price hike, 11.2%. But Chrysler says that reflects a significantly higher level of standard equipment than the 1988 model.
As we noted, the man who will soon be in the driver's seat at the Treasury Department is Nicholas Brady. And Neil, I understand you did some looking into his background.
And what I found out, Linda, is very few people know him. That is a big problem. Nicholas Brady is not exactly a household name on Main Street America. But on Wall Street, well, that's quite another story.
Just mention the name Nicholas Brady on Wall Street and the compliments start flowing.
Nick Brady is a very sound, very decent, very careful, first-rate investment banker.
He is a man of considerable experience, good credentials, and I might say excellent contacts with the administration.
A 34-year veteran of the respected Dillon Reed & Company, Brady personifies Wall Street's clubby image, a Republican's Republican, and not so coincidentally, a big backer of George Bush, one of 6 close-knit core advisors jokingly referred to as the G6.
Well, certainly he would fit into a social scene with George Bush and not look out of place.
Thank you all. Like Bush, Brady is described as cautious and often intense. So much so that he reportedly read up on horseshoe throwing after playing a poor game against Bush.
If he is methodical, that's an accolade. And if he is careful, that's also an accolade.
And like Jim Baker, he's the perennial team player, opting for consensus over controversy.
I know of no other possibility that would be any better than the selection of Brady as a replacement for Jim Baker.
Insiders talk of quick Senate confirmation for Brady, boosted by his brief stint as a New Jersey senator, and most recently for his work chairing a presidential commission on the stock market crash.
Institutional and